everybody to the second episode of the Unbanked. We have a very special guest with us today, Ian. He is the CEO and co-founder of Unbanked. It's very interesting. So Ian, give us a quick introduction on yourself, Unbanked, and we get started.
Sure. I am Ian Kane. I am the co-CEO and co-founder of Unbanked. We are an SEC-registered company. We've been around since 2018. And really our mission is just to give people more control over their digital assets. I think if you're in the crypto space today, you're already a big believer that blockchain is the future and the way all value is going to be moved. But I think it's also a very confusing technology for a lot of people that are just getting started in the space. And so at Unbanked, we've been very focused on kind of connecting DeFi ecosystem with the legacy financial ecosystem. And when I say legacy, I mean everything from ACH and wire and traditional bank accounts to Visa, MasterCard, and Amex. And so we built a platform that allows people to get in or out of digital assets through the legacy financial system.
So before we kind of dissect Unbanked and its components, let's talk a little bit more about you. So for you, what did you do before you got started into the world of crypto and Web3?
So I actually worked in the digital media space for a better part of a decade. Started my career actually as the first employee at a small media startup. That business ended up growing to about $50 million a year run rate. And so as my very first job out of college, I actually got a lot of firsthand experience in terms of learning, what it takes to actually build a business, to be successful, the right things to do as all the wrong things to avoid. I then spent my time at a larger company called Tapad. Tapad did cross-device data marketing. So basically looking at anonymous profiles of users and, kind of how do you match somebody's cell phone to their TV, to the smart fridge and their Tesla, and then create a profile on how you can actually market to that user. After that, I went to another media startup, actually where I met my co-founder. It was a video tech company that he worked at. And during this time, Bitcoin was becoming more and more popular. And we were really kind of trying to understand what gave value to Bitcoin. What made this magic internet money so special? And it was really the blockchain. And I think the level of transparency that the blockchain brings was really powerful. And so we started actually looking at how it could be used within a digital advertising supply chain, which, was basically how do you take $1 from a brand and get it through all these different hops in a supply chain to the web publisher and ultimately show it to the user. And so that's kind of how my journey to starting Unbanked began, was really just looking at blockchain and not so much the digital assets that sat on top of it.
Okay. So walk me through you kind of building up Unbanked. I know Unbanked serves a lot of different countries. So What drove you to building out this platform?
It was more or less almost by accident. So as I mentioned before, we were building this technology to actually look at, hey, how can we, make the advertising supply chain ecosystem more efficient, right? Or it could be, fintech or health related, but basically using that supply chain. And then ultimately, when the end recipient, be it a web publisher or an end user, receives their value, how are they going to get it off? Because, blockchain, managing your public keys, your private keys, that's scary. And we thought, hey, it'd be really cool just to give somebody like a Visa debit card or MasterCard and allow them to basically get the value of a digital currency across this transparent supply chain on a card and be able to spend it. And so that's how we started. Now, long story short, we spent a lot of time on the supply chain stuff and there wasn't a whole lot of interest. There really, to be candid, there wasn't a business model there. But what a lot of consumers were really searching for and what they kind of gravitated towards with our business was this debit card. Because if you think about, if you have bought a digital currency and it's appreciated a lot in value and you're ready to, cash that in and buy, your gas, your groceries, a Netflix or Rolex watch, whatever you want, you basically have to go to an exchange, you have to sell it, you pay a fee, you then convert it to fiat, you have to wire that fiat to your bank account. You have to hope that that bank account doesn't, get shut down. You wait a couple of days and then ultimately you're going to spend it on a, Bank of America or Wells Fargo debit card either way. And so we thought, why not cut out that entire process? Why not allow somebody to go from a self-custody wallet to a custodial wallet and then spend anywhere in the world Visa or MasterCard is accepted? And that's really how Unbanked was born. We started with that really kind of simple solution of, hey, let's give people a better, faster, cheaper way to, cash in on the value of that money they have. And it's been tremendous.
I love it. I think one important thing that you said was about the public and private keys and how hard it is right now to manage it. Do you have any advice for listeners on safer ways to kind of manage their public keys or private keys?
I think MetaMask is a really great product. I think, we see it even with some of the most advanced users, like one of the Bitcoin core devs, right? He just got hacked and he lost, access to his funds. So it's always a scary thing. It's always good to start with a very small amount of money. You don't need to put thousands of dollars into, your self-custody wallet. I think you start with $20, $100, learn how to interact interact with MetaMask, right? Learn how to connect your wallet to Uniswap and be able to get in between assets. And I think that's probably the best way to start. I also think that US-based solutions like Coinbase or Kraken are still a safe place to keep your money, right? Because US-based companies have laws and regulations that they need to follow, and they don't operate under the same level of freedom or, kind of moving fast and loose as some of the offshore companies do. So I think, self-custody is definitely the way to go. I'd always recommend that. But I also think that using a custodial centralized platform in order to get your digital assets or hold, a reasonably small amount of money is a very fine solution, as long as they're US-based.
So speaking of that, I know a lot of people are kind of scared right now with situations like Celsius or FTX or Blockfi. People had, money on those platforms and they lost it all. So what kind of makes Unbanked a little bit more safe for them to keep their assets on there to know that, tomorrow all of it's not going to be gone?
Yeah, no, it's a great question. It goes back to what I was saying before, is you want to ensure that even if you're an international user or a US-based citizen, you're working with US-based companies. That means it could be, like I said, Coinbase, Kraken, a lot of the issues that have come up with TX, Celsius, Luna. These are companies that operated offshore. The majority of their business operated offshore. And that's a real problem because they're not held to the same regulatory standards as a US-based company. I'll tell you, at Unbanked, we have a ton of audits we go through, a ton of compliance protocols that we go through. We're registered with the SEC, with FinCEN, with FINRA, with the FCA in the UK, with FinTrack. And I'll be honest, it's actually a really big pain in the ass when you're running a business. Regulators don't move quick. They don't. But there is a reason why they make founders like myself go through this hurdles, because it ultimately brings a level of, I think, safety and professionalism to any kind of new business. And when you're dealing with people's money, that's a really, really serious thing. And so you can't move fast and loose. And I think a lot of these companies, either through just a lack of kind of foresight, management, or through more nefarious means, right, outright theft, like we have in the FTX case, a lot of these companies, saw how being over leveraged and not following proper risk management and not following proper, toolings, you can hurt a lot of people. And that's the most unfortunate thing with all of this, is that a lot of people lost a lot of money. And it's not, these aren't big institutions. These are, families. These are, people that are saving their kids' college, or it's awful. But like I said, I believe in the future, whether you are an international crypto user or you're a US-based resident, I think most people are going to gravitate towards the companies that are headquartered in the US and have that extra safety net in terms of protecting people's assets.
So you think the first round of defense, as far as on-ramping your money into the crypto space, it needs to be through a source of a regulatory platform like yourself or like Kraken or Coinbase? On-ramping your money into the crypto space, it needs to be through a source of a regulatory platform like yourself or like Kraken or Coinbase?
I would say always gravitate towards a US-based company. I think you can definitely use other solutions out there. I'm not saying that every international company is bad. I think a lot of these companies, you just open yourself up to unnecessary risk. And so that's not to say you might not use an offshore exchange and you might not buy some crypto and then move it to a self-custody wallet. That's great. But just always make sure that you're actually able to move your funds off those platforms and that you're never doing, large bulk trades all at once and you've got a ton of exposure on this exchange. Because if shit hits the fan, what is your recourse? How are you going to get that back? And if you're dealing with some exchange that's, based off an island somewhere in the South Pacific, it's going to be really, really hard to get your money back.
That's true. So building out Unbanked, having to go through the process of getting regulated, what do you think the biggest challenge that you faced so far with building out Unbanked?
Many. I'll be honest, it's a hard business. It really is. To get started in this space, you got to think back to 4 or 5 years ago. Visa, MasterCard, the banks, they were not as bullish on crypto as they are today. So Visa at the time was actually shutting down a wave of, crypto debit cards out there. And the reason being, the backstory behind that is that there were a lot of companies going out there, effectively bulk buying Visa gift cards and then using those gift cards and saying, oh, we've got a partnership with Visa, and they're out there raising a bunch of money through an ICO. And Visa was like, no, and they found out who the issuers are and they shut down those programs. And so a lot of people got this mindset that, Visa is anti-crypto. And that isn't the case at all. I think all these card networks want to support new technology and digital transformation and digital payments, but they want to make sure that people are doing it through the proper channels and the proper avenues. And so our bet at Unbanked in the early days was that, listen, we're a US headquartered company. We're going to work with the regulators, with the banks. We're going to explain the process. We're going to ensure we have the proper safeguards. We weren't the first card to market. I think we were probably like the fourth or the fifth out in the market at the time, just because we had to work through these different regulatory channels. But it ultimately proved to be a really smart way to approach it. And it acted as a great catalyst because our card program is not just live in the US now, it's live in 27 EU countries. It's going to be launching in Latin America. We're going to be launching in India, Nigeria, and a bunch of other countries later this year. And so we've been able to demonstrate through a level of, candidly, like responsibility and proper execution that, we can be a trusted company in this space.
Listen, if you are watching this and you are a creative, if you're a content creator in the crypto space, if you're a Metaverse Architect, if you're a blockchain developer, or if you're a founder building something dope in the Web3 space, whether that's a DeFi protocol, NFTs, whatever it may be, I want to see how we can work together and how we can get you on our platform to discuss some of the things you have planned and to also share your story on how and why you got started in this space to begin with. So if this sounds interesting to you, feel free to reach out. We're going to have a link in the description. Feel free to click it, fill it out, and our team will definitely be speaking with you soon. Okay, that's all I got for you. Let's get back to the show. How has the adoption rate looked so far? I mean, Visa is starting to implement it. We're seeing MasterCard and so many different companies, institutions starting to get adopted to the crypto space. So how have you seen it on your end? Because you're the ones actually talking to these people, talking to the who kind of make the laws.
It's great. I mean, we have relationships with Visa, MasterCard, and Amex. All are great companies. All are really thoughtful in the way they want to approach the market themselves, and kind of, iterate and compete with one another. And we work with the banks. So I think that from an adoption standpoint, we've seen really great adoption. A lot of times people kind of confuse Unbanked as being a consumer-centric company. And the reality is that we're more an infrastructure company. So what we do is we not only offer the Unbanked card to consumers, but we also power debit cards for a lot of the other Web3 companies in the space. So we work with the Litecoin Foundation on their Litecoin card. We work with Nexo, Stormex, Stacks, a bunch of great brands. And the general idea behind this is that people treat digital currencies like sports teams, right? Everybody's got their favorite, and there's always this kind of echo chamber, right? Where you want your digital asset to be successful, and so therefore you always want to support it in your payments. And we thought, there's no reason to have Unbanked be a walled garden, right? We don't want to approach this the same way Coinbase or Revolut does. We'd rather say, hey, we've built this really great on and off ramp, so we'll give other companies the technology platform that we built. We'll handle all the compliance, which is actually a really, really big deal. We'll handle all the customer support, things like card fulfillment, basically everything that another company needs in order to run a card product like that. And all they have to do is market it for us. So actually, I'll show you right here. Got my Litecoin card here. This is the card that we designed for Litecoin. Don't I'll cover my numbers, but that's it. And we've seen a really great adoption rate from that. And our view is that this isn't a zero-sum game, right? A rising tide lifts all ships. We actually benefit the entire industry by not just keeping these on and off ramps for ourselves, but basically empowering all these other companies to go and have either bank accounts for buying their digital asset or a card for spending their digital assets, allow them to go out there and be successful. And if we do our job right, a lot of times people don't even know Unbanked is the one powering those programs.
So walk me through the process. I have US dollar and I want to buy some Bitcoin, buy some Ethereum to be able to spend it on my card. How does that process work?
Yeah, so let's say you're a U.S. resident, and the process is a little different for every single country that we operate in, just because there's different laws and regulations. But we're here in the U.S., so if you let's say you want to buy $100 in Bitcoin, what you can do is go to unbanked.com or one of our white label partners. You fire up basically a virtual bank account where you get an IBAN number and a routing number, and you can send money in to that account through traditional ACH or wire. We work with Plaid, so it's a really great service, makes it quick and easy. And then from there, you can convert your U.S. dollars into Bitcoin or Ethereum or whatever asset you want to buy. You can then send it to the card directly, or you can choose to settle it to a self-custody wallet. And so one thing that we've always been really passionate about is, let's ensure that people have an option to use our centralized platform for buying the assets they want, but send them directly off our platform. It's kind of a trust but verify, right? You want to trust us to actually buy that asset, but you should be the one that holds it. And in the same regard too, we have a lot of people that actually use our card product, and they'll buy a little bit, they'll put it on the card, they'll put the lion's share on a self-custody wallet. And then being that the blockchain is 24/7, whenever they're ready to spend, they'll just send a little bit of funds directly onto the card, and then they go out and buy, dinner, go to the movies, whatever they want to do.
Wow. So as a user, I'm able to send and receive whenever I want, 24/7. Is there typically like a hold time? Let's say if I buy some Bitcoin, is there like a hold for 48 hours or?
Yeah, so on the traditional banking side, we're still beholden to traditional banking hours. But if you have crypto already and you just want to send it to the card, it's relatively quick. Probably the amount of time it takes to, make a blockchain confirmation. It comes in handy where if you've got, let's say, 100 Litecoin and you want to go on a trip and it's, Saturday at 10 p.m., you could just send it from your self-custody wallet to the custodial wallet paired with your card number, and then you're off in your spending. The other cool thing too is, if you might just be watching this video right now, you've never heard about Unbanked, you say, hey, I want to go sign up for that Litecoin card, you can get it within a couple seconds. In terms of actually getting people on-ramped, we've focused a lot on instant gratification. So let's say somebody goes to litecoin-card.com, they sign up, they put a little Litecoin in their account, they go through the KYC process, we give somebody a virtual card that they can then link with their Apple, Google, Samsung Pay, and then we ship them the physical card, which takes probably about 7 to 12 days, depending upon location. So yeah, there's a lot of different options in terms of how you on-ramp in, either through the bank account, or if you already have crypto. You can also use our cards in the US at like Walmart and CVS, where you can actually go cash in hand, give it to the cashier. They will then take that cash, put it on your card, and in real time, we convert that to currency for you.
So before I convert it into USD or USDC, am I still like open to the volatility of the markets, or is it stable at that point?
Yeah. So one of the benefits of our card is that you stay in the digital currency that's used on the card, right? So I keep going back to Litecoin as the example. If Litecoin, you've got one Litecoin on your card and Litecoin's at $50, you've got $50 in spending power. If Litecoin appreciates, right, and it goes up to 70, you now have $70 worth of spending power. But keep in mind, it can also go in the other direction. So I think what we've seen is that in bull markets, people are okay kind of taking that risk because everything's effectively moving up. But in bear markets like we're in now, consumers would prefer to be in stable coins. It just de-risks them, and nobody wants to go out, have $100 on their card, and then when they swipe the card, realize they only got $60 left.
Yeah, that's true. So one question that I do have is there any limitations on how we on-ramp as far as for what network that we use? So if I wanted to use Polygon, if I wanted to use Optimism or Arbitrum, is there like a limitation on what I can use?
Yeah, so right now, what we've focused on really the B2B side is the companies that we've partnered with, we support the digital assets that they're using. So Charlie Lee, obviously he's all about supporting Litecoin, and that's the tribe he's part of. So we're not currently working with Polygon or Optimism or any of those other solutions out there. We are working with Solana. We're working with a couple different ERC20 based assets, Litecoin, Bitcoin, et cetera, Stellar. And so I would say if there is interest in somebody who wants to have an Optimism based asset, we can make that happen, but we're not approaching it like a traditional exchange would, right? Where an exchange would say, hey, I want to list as many assets as possible, and I want to just make trading fees on all this. Our focus has really been on how can we provide these financial products and these kind of on and off ramps with digital assets to either the foundation or the company behind it.
It's a different mindset. Is lending something that you guys think you guys are going to provide on your platform, or is that something that's...
It's something that we've dabbled in. We haven't approached it from the rehypothecation standpoint. So what we're not doing is approaching it like a Celsius or Blockfi. I think we've kind of seen the end result of doing that and kind of poor risk management. One of the things that we did do a small pilot on was allowing people to connect their bank account, which holds FDIC insured money, USD, allow them to buy crypto and then connect directly to a DeFi pool where effectively they can go and they can manage their own yield, but have a direct on-ramp with our platform. We rolled that out right around the time where the market was starting to go down. So we quickly scaled it back. We want to ensure that when we're giving consumers a yield-bearing experience, that it's not too confusing. And candidly, right now, going from USD, buying crypto, managing your MetaMask, connecting to a DeFi pool, there are a lot of steps. And so the benefit of a Blockfi or a Celsius is that it's very easy because you're effectively giving over custody and control to somebody else to manage all your money and do the complicated stuff. The hard part with our product was that very confusing, which led to a lot of questions, a lot of customer support. So we need to be able to refine that. I don't believe we'll do any kind of hardcore lending and borrowing anytime soon. We may get back into it with more of a stablecoin based asset. So that helps kind of alleviate a lot of the concerns around kind of volatility.
And making that experience easier for somebody to jump into these decentralized liquidity pools to be able to earn yields is very interesting and key for a centralized platform to be able to make that experience a lot easier for folks.
Yeah. And you know what, too? There's also smart contract risk, right? So we need to be mindful of who we're connecting these platforms to. It's a little bit of a risky situation, no matter how much you try, like as Unbanked, how much we try to protect users and give them the best experience. Ultimately, when you're dealing with a third-party platform that's connected through our UI, it can lead users to have a bad experience.
Okay, while I have a second of your time, I wanted to let you know that we are actively looking for a Metaverse Architect to build out our headquarters both in Sandbox and Decentraland. So if you think you got the skills to get it done, or if you have a team that think they have the skills to get it done, feel free to click the link in the description, send us your work, and we'll talk soon. Anyways, let's get back to the show. Well, when I went through your website, I see that you had different reward tiers as far as staking rewards. So can you kind of walk us through that process and how that works?
So basically, we have our own digital asset, UNBNK. We've never focused very much on using it on exchanges or kind of playing that game of, let me pay Binance $1 million to get listed on there. We've always focused on giving it utility on our platform. And so what we do is we pay people between 1% and 6% back on all their transactions if they're staking UNBNK. And so I believe the top tier is 145,000 UNBNK. You'll get 6% back on all of your spend, not on ATM machines, not on kind of cash equivalents, but for the most part, any kind of merchant where you're making a purchase, you'll earn 6% back in UNBNK for staking 145,000. And we lock it up for every 30 days. And so if a consumer doesn't want to earn those rewards anymore, they can just unstake it, they can get it back, and then they can spend it directly on the card. But we've really kind of focused on almost like an American Express model, right? Where you effectively get the value in points Those points are really just tokens, which can be traded. They can be removed off the platform. They also have the ability to appreciate or depreciate, right? So your 6% in a year from now, it could be worth 20%, it could be worth 1%. But that's the way that we've approached the digital asset. And being that there is a level of, say, finality, it's a finite amount of UNBK out there, there's only going to be a limited amount of people that can actually pay to stake, right? Because at some point it's going to become counterproductive, not cost effective in order to actually pay that. And I think we've seen that with some of the other platforms out there that have a similar model where you have to buy $400,000 worth of somebody's coin or token in order to get those rewards. And a lot of people aren't going to do that. And so, yeah, we've seen a lot of great response on the rewards program. And so our focus is let's just continue to roll that out. Let's continue to grow it. And as we roll our card product out to more geographies across the world, the footprint of people in every different region who can actually participate in that program is going to be smaller and smaller. And the way we pay for it is pretty straightforward. We have the white label side of our business, which is effectively generates revenues and profits for the company. All we're doing is using the revenues and profits, we're buying back UNB&K, and that's how we're paying back the consumers on the rewards.
Besides the US, where have you seen the most adoption? Because you're in multiple different countries. So
Europe is interesting. It took us about 2 years to get live in Europe. Obviously, COVID slowed things down there, but also Brexit really messed things up in terms of how they approach things. So what used to be kind of Europe, you now have got UK, and then you've got 26 other countries. Every country has different rules and regulations. And so I think it's made the market climate there really difficult to operate a business. And so we've seen a lot of great adoption in Europe. I think Latin America is going to be the next region that we enter. We've seen a lot of good adoption on the bank account side of things. And I think with the inflation that's happening there, which is, above and beyond even what the rest of the world is dealing with, there's going to be a lot of need for products like our card. And so, it's really exciting. And like I said, it's not a zero-sum game for us. When we enter these new markets, it's not just about rolling out Unbanked's card products, it's about, rolling out the Litecoin Foundation and Nexo and all these other brands that we're working with. And it's cool because every card has a little bit different approach in how they want to do things, right? How they want the card to work, how they want rewards to work, what the incentive is for the end user. And so ultimately the consumers are going to have a lot of choice between all the card programs that we partner with and that we offer. But I think, Europe, Latin America, Nigeria is another one. There's a ton of adoption in Nigeria. We're working through there. Unfortunately, the government is a little difficult to deal with. I think India, a lot of APAC regions, our goal is we want to take over the world, right? But we need to do it in a kind of very thoughtful and methodical way.
Slow and steady wins the race.
Yeah.
So for somebody in Nigeria, let's say when you guys do eventually roll it out, how easy is it for me to have the ability to create an account?
Like I said, our focus has really been on instant gratification. When we work in any single country, the important thing is that we're working with a regulated financial institution, right? That could either be a bank, or in Europe, they have EMI issuers. And so ultimately, that bank or that sponsor for the card program or the bank account is going to be the one that determines the level of risk and kind of process that they want to follow for the onboarding, right? And so what I mean by that is you can go to Unbanked, you can register for an account, right? Give me your email, give me your address. That's fine. It takes you 2 minutes. When you actually go and enroll in one of these products, you need to have documentation, right? There's really no way around doing the KYC, know your customer.
Yeah.
So, for the US, what we do is we say, hey, give me your name, give me your address, give me your social. We ping that against the database. The bank has already verified the process that we're sending the user through. So they say, hey, we're great. If a regulator comes to us, we're going to be able to answer all their questions and then ultimately feel good about giving somebody either a bank account or a card product. Once that consumer already has that product, we still need to manage flow of funds and a bunch of other compliance tasks on the back end. And that's one of the more difficult things with our business is that we not only track flow of funds coming in and out across the legacy wires or rails, I should say, like Wire and ACH, but we also track a lot of this stuff through the blockchain. And so what's important there is every country, depending upon their laws and their rules and depending upon what the bank wants, they want to make sure that they're not facilitating nefarious activity, which I think is reasonable. The balance is how do you ensure that you're not bucketing a good user, a quality user, into something that, is worse, terrorist financing, money laundering, whatever else that is. And so it's always a bit of a balance, and we're always trying to continually improve that process, especially based upon the different regions. But anyway, to give you kind of a long-winded answer to your question, in terms of onboarding users in Nigeria, the goal is let's give them the same kind of seamless process that they would have in the US or Europe, right? But we also understand a lot of times the documentation isn't there in the same capacity, right? That they don't have maybe the right amount of documents to meet the bank standards. And so that's where you kind of get into this opportunity around like, is there a regulatory arbitrage opportunity, right? Can you effectively issue somebody a card from a different region in the world? And so those are the things that we're working through right now, because we want to make sure that we can, onboard, hundreds of millions, if not billions of people around the world.
So how does that process work if there's maybe somebody, let's say Haiti, a group of individuals, or Jamaica, if they wanted to be able to kind of have access to this platform, what is the process to get other countries to be a part of Unbanked?
So what we found so far is that it really comes down to working with a bank that's comfortable operating in that region and also will meet the regulatory standards of the regulator there. They need to be able to, operate there. They need to be comfortable operating there. And then if we're going to be issuing a card, we need to ensure that the card networks, either Visa, MasterCard, or Amex, are comfortable operating there as well. And it's been, like I said, it's been a painful process because getting to a lot of these countries usually requires engaging with the regulator, getting written letters, getting legal opinion letters, bringing in third-party law firms. Ultimately, nobody wants to be the one to say, hey, we gave this company approval to launch here, and the regulator comes down on them. But I think oftentimes too, blockchain and digital assets are so new that a lot of times the regulators, they don't have particular guidance internally. And so they don't want to be the ones there to say, oh yeah, I give approval to this fintech company to go and do, crypto cards. They want to ensure that, they're not moving too fast and loose. And so that's the thing where you basically need to bring all parties to the table and say, hey, are we okay launching here? Here's how we're going to approach it. And there's no fast way to do this. You can't go and just throw a bunch of money at this problem. You really just need to go through this process. But in my mind, I think we have got such a great business because it's a really defensible moat. If you think about, put the pain aside, once you're actually live in these markets, it's going to be that much harder for another business to come in and compete with us. And sure, there might be localized businesses, but our focus at Unbanked has always been on how do we build up this global network, right? How do we ensure that people in all these different countries will be able to get cards? And by the end of this year, 2023, we're going to be able to reach, I believe, 3.1 or 3.4 billion people around the world with our card product. It's a massive number, and it's something that a lot of other companies can't currently do because they're very regional focused. But again, with that comes a lot of pain and a lot of ensuring that consumers have a good experience going through this KYC process, while also ensuring that our B2B partners are, comfortable with the way we're approaching it. So complicated, to say the least.
I think that's very strong, though, because when you think about, let's say, for example, Nigeria, you think about the Philippines, or you think about Haiti, there's a lot of people who work virtually in those countries, right? So if they're able to get paid in USDC and have access to it immediately without having to go through the process of maybe going through PayPal and getting fees taken out, or if I had family that I want to send money to in Haiti or wherever, you're going to take fees out. So for somebody to have the ability to send money from one place to another with very minimal fees getting taken out, it's going to be game changing.
Absolutely. You kind of hit the nail on the head, right? I mean, think about that. Okay, so let's say, you've got somebody who's working in Miami, they've got family back in Haiti, right? And effectively they're making money and they're sending money back to their family just because, to help kind of fund their lifestyle. Right now, if you use, MoneyGram, use Western Union, they're taking 10%. They're just screwing people over, and it takes a long time. You could use a bank wire. A bank wire is only going to work between the hours of, 8 to 4. It's going to cost $20. If there's any kind of FX fee, if you're doing like an international currency, they're taking 7% there. And it's a really horrible experience. But compare that to, let's just say, taking USDC on, let's say, Stellar blockchain, very fast, cheap, takes 5 seconds, it settles, it's definitive, and it's just a way better use case. Now, the problem is, what if, you're working and you've got, your grandmother, back in Haiti, how is she going to learn how to use USDC on a self-custody wallet or MetaMask, right? And so that's where something like the card comes in, because no matter where you are in the world, everybody knows how to swipe a card, right? Yeah. And so, even in, in Asia, they've got, mobile apps. They're more advanced than just the card structure, but giving end users all these different choices, allowing them to get in and out of digital currency and kind of reinvent the way, money transmission works, is really the end goal. And it's an ambitious one. And, there's a lot of smart companies in the space that are working on it. But I think what everybody can agree on is that, blockchain, it's way better than wire. You don't have to worry about clawbacks and chargebacks and all this other stuff. And so, it's really powerful technology. You just need to educate the masses and get them in there, give them a good user experience. And I think that's, the crypto industry is still, I think, working on, is how do you give the consumer a really good, fluid experience? And if they want the self-custody aspect of it, and they want to manage their own assets and all that stuff, then you give them that capability. But the focus of the UI should actually be on simplicity. Hey, here's your money. And a lot of times people won't care. If I could send you money, if I could send you $150 and it happens instantly and it costs me, a thousandth of a penny, do I care if I'm using blockchain? No, I just know that I gave you the money and that you received it and that you can use it. And so that's ultimately the direction that we want to get into.
I think that's one of the biggest things that I had a problem kind of understand that concept, because I always kind of encourage everybody to be self-custodial, but at the same time, not everybody wants to be. Like, when you think about that's over 50 or 60 or 70, they have a certain way that they live. Yeah. They're not going to want to write down their seed phrase or engrave their seed phrase on a steel plate. It's difficult, right? So when you have something that's so easy to use, user experience is key. So you have that experience being as easy as possible. That's what's going to be there.
Yeah. And you said it best, is that different strokes for different folks, right? Some people are going to be really passionate about self-custody and they're not going to trust banks, and they're going to have the technological prowess to actually, go out there and manage that stuff. And in the same capacity, you're going to have people that just don't understand technology, right? Think about, if you've got a family member, you're still educating them on how to open a PDF or, send an email or send this something. There's a knowledge gap there. I think the goal is just choice, right? You want to give consumers choice, allow them to interact with the platform in the way that they see fit, because finance it's a very personal thing. If you think about even digital assets as a whole, right? It's the debate between proof of work versus proof of stake versus, how centralized should the blockchain be? And I've never viewed it as it's a zero sum game and that there's only going to be one digital asset to win. I think, Bitcoin is a great store value. I think Ethereum, really great, powerful platform for smart contracts. And I think, Stellar is really great for payments. And so ultimately, you're not going to have something that's great for payments also be a great store of value, in my opinion. And I will say this too, on the self-custody aspect of things, there are a lot of smart people that have done self-custody that have worked in this space and have gotten their accounts hacked. Not because the blockchain was hacked, but just through social engineering. And the worst part about that is it could be somebody across the world who hacks your account. They take your money, it could be your life savings, right? And they run it through, a Mixer or, CoinJoin or any of these other platforms out there, and it's gone. And you really have no recourse. You can't do anything. And so that's the scary thing about it. So where I think blockchain really plays an important role, it almost acts as a counterbalance for the centralized institution. So nobody gets too much power and they take advantage of it. But at the same time too, you have a little bit of convenience where you're not opening yourself up to something where you're forced to use self-custody when you don't really want to.
And I think having that option is definitely going to be key. So I definitely agree with that 100%. One question that I do have: what do you have in store for us for 2023?
We've got more countries coming. That's always been our focus, is we want to build out a global network. So Latin America is going to be coming. I believe it's about 29 countries in Latin America that we're going to be servicing. We are going to be going into India, Nigeria, APAC, EMEA, a bunch of other countries, Canada. Like I said, we want to ensure that we can on-ramp consumers into these card products in as many regions as possible. In addition to that, we've got a pretty ambitious roadmap. We've been applying for a bank charter. We really want to become our own issuer. And so that's been in process. And hopefully 2023 is the year that we make that all possible. We've got a fundraise too. The cool thing about Unbanked is that all of the capital that we've raised to date has actually been through users of our product. So we've used platforms like Republic. We're actually going to be launching on Start Engine as well. And so everybody who's a user of our product also has the option to be an owner. And I think that's actually really, really great. So we're going to be launching on Start Engine as well. And, a couple other products I don't want to announce here today, but some really cool stuff that we have coming out. And so I would say, if you're interested in Unbanked and what we're doing, go register, create an account at unbanked.com, or just follow us on social media. Check us out on Twitter, on LinkedIn. It's a great way to just kind of stay up to date and kind of follow our journey. And, we always try to make the journey one worth watching.
So before we wrap up, I have two final questions. First one is, what's it going to take to onboard the next 100 million users into Web3?
I would say, regulatory clarity would be great. It's easy to, sit here as a founder of a fintech company and wanting to kind of do things and say, listen, these regulators just got to pick up the pace. I'm sure these regulators have firsthand experience with a lot of things that they've learned through, past decades of experience where there's a reason why the process is slow. I would say, I think, embracing blockchain, embracing technology, giving regulatory clarity, allowing each individual user to kind of be self-sovereign, have self-custody if they want that. I think that's really important. Specifically here in the US, I think we're dealing with a lot of fallout of FTX. I think a lot of people are looking at it as FTX is representative of the entire crypto industry, and that couldn't be further from the truth. FTX was an offshore company stealing money from people. So let's just start there. That's kind of what was happening. And then from there, you can kind of make the distinctions between, what is the proper use of digital assets? What are the proper policies? And it goes back to what I was saying before, focus on US-based companies that are handling digital assets, and I think you'll have a greater level of safety. But yeah, I think ultimately, outside of the regulatory coverage and the clarity, is really just better UIs, allowing people to actually get into these digital assets, not focus so much on maybe volatile cryptocurrencies like Bitcoin and Ethereum, but focus more on stablecoins or fiat-backed assets within that country's own denomination. Because I think that's kind of the best stepping stone to actually open somebody up, right? It's the gateway drug. You kind of show somebody the efficiency of sending money across Stellar blockchain using USDC compared to USD on a wire. Then where's that user going to go from there? They're going to say, okay, cool, I understand how USDC works. Oh, what is this Bitcoin thing? What is this Ethereum thing? And I think that paired with a really great slick UI, it's going to be really important.
The final question is, what is one thing you want to see in the crypto space that you don't want to build out yourself?
I think decentralized social is really interesting. I think social media is not necessarily a great experience these days. I think it's very powerful, but I think a lot of consumers get stuck in echo chambers. And so I think a lot of that comes down to the algorithms and the way things are programmed on those platforms. So I think the ability for somebody to go create a decentralized profile that they're a self-custody user of, and then take that profile to different platforms, whether it's a social network or streaming platform or whatever it is, and then be able to kind of be self-custody there. That's going to be really, really interesting. And I don't think we've seen like the full scope of what that could be. I know there are some platforms out there like DeSo that are working on this stuff, but I think that's going to be really interesting, and it's going to be a really big trend for 2023. Also, how that kind of decentralized social identity pairs with gaming. I think gaming is going to be really, really big too. And we saw a little bit of it with NFTs, but then with the market falling apart, I think there's been a lot of blowback on NFTs.
Yeah.
But I'm still a big believer in tokenized assets as well. I think, people often made the mistake of NFTs just being, crypto punks or Bored Apes. And it's really more than that. It's really kind of a membership and an identity. And so the way that you go and you transition the narrative from pixelated picture to actually, hey, this is almost like a country club membership, right? Where I effectively have this NFT, and this NFT gives me access to unique things, and it's paired with my decentralized identity. It's going to be really powerful. So I'm excited about that, but I don't want to touch building it.
I actually love that you touched on the Decentralized Country Club. I don't want to shill a project or anything like that, but I invested into a digital country club, so an NFT membership, Linkstyle, and it's been pretty good. They've been doing a lot of cool stuff. They're looking to build out their first golf course, and we get like discounts at stuff like Top Golf and just a whole bunch of cool stuff. And you can see the power of crypto, blockchain, and NFTs like in real time.
I mean, I think it's a perfect example of how you can transition a virtual tokenized asset to a real world experience. And that's what's so powerful, is that, we even saw it, a little bit with like, where was it? Was it Art Basel? Bored Ape Yacht Club had an in-person meetup, and there was all these kind of cool experiences, and you had to be a member. And, like a traditional country club, right? When you go and you join a golf course or, Soho House or whatever it is, right, you got to buy a bond, right? And when you buy that bond, you get the membership, you get the access, you pay your dues, right? But then if you want to leave, you also have to sell that bond to somebody else, right? And sometimes they have people waiting, and sometimes you have to go out there and find it yourself. And so I think of NFTs as the same way. Now, the hard part is which are going to be the NFTs that have teams behind them that are actually going to deliver on the product and deliver on the vision. And that's where it's a little bit of a crapshoot. But I think Linkstyle is super interesting, and that's definitely going to be one to watch in the future.
Listen, I appreciate you coming on the podcast, talking to me for a little bit. Is there any final words that you want to share with the listeners?
No, Jeff, I'm just saying, man, listen, this podcast is great. I came across it. I think you're doing a fantastic job. The content that you're producing is educational. It's high quality. I love the name. I love the branding. So keep doing what you're doing, right? Keep building up the Unbanked brand. And that's it. And I'd say to anybody who's just thinking about getting into the space, you don't have to chase the next shiny thing. I would say, if you're going to get in the space, you're just learning about crypto, put in $20, put in $100. Don't go crazy, right? Kind of learn the ebbs and the flows, kind of learn what it takes to move money from one wallet to the next wallet. And, we're still very early, and it sounds cliche to say, but I mean, we're still very, very early in terms of what the overall adoption of digital assets is going to be. And so take your time, understand it. And when, you've got a good grip on how everything works, it'll be a great time to kind of, make a bigger bet on it. I'm obviously very bullish on the future of crypto and Web3. And other than that, I would say if you want to learn more about Unbanked and what we're doing, go to unbanked.com, follow us on social media. Hopefully you'll get a little bit of education from us as well.
Love it. The final words I have, it's the best time to build because we're in a bear market. A lot of noise is gone, and all of that fluff is gone as well. So if you're looking to get into the space, now is one of the best times to do it, just because all the fake influencers or bad projects, they're all getting washed away. Money's drying up, and the real builders are staying in. So now is the best time.